7 matrices to pick dividend stock. The last is the most important. Hello, welcome back to my YouTube channel. My name is Peter Akela and I'm so excited to welcome you back. In this short video, I'll be talking about 7 things you need to check out before investing into a dividend stock. So the first one I'll be looking at here today is dividend yield. So what is dividend yield? Dividend yield is the percentage of the dividend that is being paid out. So dividend yield can be gotten by dividing the stock price by the dividends you are being paid. As you can see on the screen, the stock price of this stock, $234.59. The dividend that is being paid is $5.16. So if you divide the stock price by the dividends and then do it in percentage, you are going to get 2.23%. So that's the dividend yield. So you need to know the dividend yield of this company. You need to be able to compare that to other stock in that industry. So the next one is the payout ratio. So what is payout ratio? Payout ratio talks about what is the percentage, how much of the money that they are making, how much of the company's profit is used in paying dividends, how much of the company's earnings is used in paying dividends. So if you look at it, the one on the left, which is business A, use 70% for reinvestment. That is, they reinvest 70% back into the business and then they use 30% to pay dividends to all of their investors. So, and a company B invest 20% back into the business and then pay 80% to the investors. So, which one would you rather go for? The one that pays 30% to investors or the one that pays 80% to investors? None of them is good or bad. You need to compare all of the options, because a company paying 30% of $1 trillion and a company paying 80% of $1 million is not the same thing. The one paying 30%, as dividends, is not paying less, and a company paying 80% as dividends is not paying more. You need to see the big picture. You need to look at all the other parameters and numbers before you decide. The next one is to look at the dividend history. So how long have they been paying dividends? How consistent have they been? How consistently have they been able to increase their dividends over time? So you need to be able to look at this, and then all of this data I'm sharing here, you can get it on Macro Trends or any of the stock analysis platform like Yahoo Finance, like TradingView and all of that. So you want to invest in a company that has been constantly paying dividends for at least a decade. So the next one is, what is their competitive advantage? Now, most of the companies that is paying dividends today, they are not starters, they are not companies that are just trying to get their footings. So they are companies that have been established, they know what they are doing, they've been doing it over time, and then they are the icon of their industry. For example, Apple, Microsoft, Coca-Cola. So, they have a grasp on their industry, they know what they are doing, and then you can see that they are sitting on a lot of cash, and then they are one of the safest companies to invest into. But you need to look at different industries and be able to look at what are the companies that are leading in this industry, and then among other factors you need to consider before you invest into them. So the next one is the top line. What is top line? Top line talks about revenue. You want to be sure that, what is their revenue? Are they growing? Are they expanding? Are they generating more money? You need to know that. You need to be sure that this company has been generating more money, increasing their revenue month in, month out, year in, year out. It is important that you are able to prove at least a decade of consistent growing of revenue. And the next one is bottom line, which is also known as profit or earning per share. So you just don't want to know that they are earning. You want to know that out of the revenue there are profits, because we can have revenue eaten up by costs. So you don't want to just focus on revenue alone, you want to focus on profit. So what is the bottom line? So they have huge revenue, I hope they have that huge profit as well. So you want to make sure that you check and be sure that they have quality bottom line, quality profit, quality earning per share for at least a decade. And then, the next one I'm going to talk about is the management. You want to be sure that the top managers, the people that are icons, that are recognizable, identifiable with this company, that are people of integrity and talent, they are people that know what they are doing. Because today, in the investment world, most companies are now being driven by the personality and the perception of how effective the team leading the business are. The truth is, perception is greater than reality, not just in investment, but in everything that we do as humans. Because nobody really have the time. We are all lazy to do due diligence. So we want to just make decisions based on the perception of the leader of the organization. Most people are invested in Tesla today because of Elon Musk. Most people are invested in what they are invested in today because of the leader of the company. Talk about Bill Gates when he was the leader of Microsoft. Talk about Mark Zuckerberg, being the leader of Meta platform and all of that. So basically, those are the 7 matrices to check, to make sure that you master before investing into a dividend investment. This last one, which is the integrity of the management, is very important. So if you have gained value in this video, please make sure that you like this video so that YouTube can recommend videos like this for you, and then make sure you subscribe to this channel and turn on your notifications so that you don't miss my next video. In the next video, I'll be talking about ratios you need to check before investing into growth stock or all stocks generally. Thank you so much for watching. See you in the next one.